Hold on, wait. Did I see you at the Only and Living Experience last year? You didn't come? Let me show you what it was all about. There is nothing else like this. This is the only real estate experience that's made for us. Yeah, you and me. And not just you and me, brown people, faith-driven people. I mean, not only was it an experience, but they learned tangible advice. Plus, we had an amazing time. And guess what? I don't want you to experience any more FOMO. I want you to be there in the building this year. And I'm about to drop all the details for the Only and Living Experience 2025, and you will not want to miss this. Plus, I am gonna offer an exclusive sweet discount for the early bird folks who grab their tickets. So if you don't want to miss out this year, and if you want to take advantage of a very, very good bonus, I'm going to need you to do this right now. I'm going to need you to go to the episode show notes today, right now, join the wait list so that you don't miss out when tickets drop. I got it? Let's do it now. Now let's head back to the episode.
If you wanted a quick way to identify what are the things that are potentially going to cause you a claim, pay attention to the questions that the insurance company is asking.
A person's wealth is determined by their assets, investments, and things that they own. I say true wealth is about how you live it. Your girl is back. Welcome to Wealth Within Reach. All right, welcome back to another episode of Wealth Within Reach, and we have a really good one today. Today we have a really awesome conversation. One of the biggest expenses with real estate investing is insurance. Okay, so we have a really great conversation all about insurance today. I'm really excited to welcome Datha with Steadily Insurance. Datha is the COO of Steadily and has not only, what I love about your story is not only do you run an insurance company, but you are an investor as well. And this insurance game is very personal to you and is a big part of the reason why you got into insurance after being an investor. So we're going to dive all into that conversation as well. But thank you so much for being on the podcast.
It's a pleasure. Thank you for having me.
Thank you for being here. So I was reading that you're in Kansas City and you were flipping. You had a fire?
So Darren, my co-founder, he had a fire at one of his properties. You'll have to hear his saga sometime of the continuing issues that he's had on this property in Chicago. I'm an insurance person, so I've spent my whole career in the insurance industry. Straight out of college, I joined the insurance industry. But I also love design on the side. It's just something I enjoy doing. And I flipped my own house first. I went and bought a property that I gutted. I took it down to the studs and built it back up. And then I thought, that was kind of fun. I bet I could make some money at this. And so I decided to take on a 7,000 square foot flip here in Leawood, Kansas.
Wow.
Because go big or go home.
Yeah.
So I bought this massive house and didn't quite gut it, but made massive changes to it structurally, and sold it. And it was during that time that we were also starting Steadily, because we had kind of identified going out to get insurance on these properties, whether it was a rental or a short term or a renovation, it was so painful.
Yeah.
And before, I'm in insurance, but when I went out to get insurance, I thought, I'll just go online. I'll just get a price. It'll be super easy. And it was not pre-Steadily. And so when we came across, we kind of stumbled on that pain point. We kept griping about it. Why is this so archaic? Why is nobody fixing it? And then I realized, I have the skills to fix this, so why don't I just do it? So that's when the three of us co-founders synced up and decided to start Steadily to solve the problem ourselves.
I love that. There's so many gems we're going to pull out of that. Number one, I connect with it so much because I remember starting out investing, and specifically I was heavy Airbnb when I first got started. It was really difficult to find insurance. This was in 2016-ish. It was really difficult to find a company that would insure us being a short-term rental. It was nearly impossible. And I didn't realize why I needed to get a different policy. When I finally realized it, everyone said no. And so I love that you guys kept having an issue, and you notice, okay, there's something here. Also, I always say that God doesn't waste any of our experiences.
That's
Because
true.
your background in insurance, also your love for design, led you to this unique place. That's so awesome.
Yeah.
And then your brother's situation with his crazy house, all of those things led to Steadily. Prior to Steadily, give me a landscape of the insurance space. Like, what are the different types of insurances from a property standpoint are out there?
So I'd say the biggest buckets are going to be personal and commercial.
Yep.
Commercial is where you tend to be talking about bigger dwellings. So personal lines can cover 1 to 4 dwellings typically. So if you have a single family up to a quad, you can usually do it on the personal line side. When you start getting into units that have 5 plus, just know that kicks you into a different category of insurance, and you're going to end up having to get a commercial policy, most likely. And then within the personal line space for property, your 3 main types are going to be a homeowner's policy, a landlord policy, or what we call in the industry a DP3. It's a dwelling fire policy. Where the P comes from, I have no idea. Or a renter's policy. And each one of those are for a very specific use type for that customer. And you want to make sure that you're in the right one, because if you buy one thinking it's something else, you can buy it. I think that's the mistake that sometimes people make, is they're like, yeah, but it let me buy it. You can buy it. What matters is when time of claim comes, they're going to go back to that policy and say, this policy has an exclusion if you're home sharing, or this policy has an exclusion if you are not residing in it yourself. And then you're going to have paid for something that's of no use to you when it's time to actually use the claim. And so that's where making sure you're getting the right policy on the front end is really, really important. Not so that you can purchase it and say you have it to satisfy your lender, but so that you actually have coverage when it comes time to submit a claim.
No, this is so good. That's really good. Insurance is a big hot topic right now. Things cost more right now. Inflation is higher, and just everything costs more. And most recently, being an investor has been quite difficult. I'm in Georgia. I invest in Georgia, and I also invest in Texas. That happens to be both markets where insurance rates have increased. What is that about? How does that work? And why have rates increased?
The way that insurance rates work, they're factoring in 2 things. One you can control, one you can only indirectly control, or we can control as a community. So they are underwriting you as an individual and your property. So many insurance companies are looking at your credit. People who have good credit tend to have fewer losses. It's just what the data says. Mm-hmm. They are looking at, your experience running the homes, what kind of other claims you've had in the past, how involved you are in the property. It's often a big red flag for an insurance company if you are owning properties in other states or other cities and you don't have a property manager involved, because what that says to them is you're absent. You're not seeing that property. You don't know what's going on with it. Something bad could happen. And if you were there in person, you would be able to adjust it quickly. But because you're not there and nobody's looking at that property, it could fester for 6 months. Let's say a water leak or something like that just goes on. And so then it turns something that could have been $10,000 into $100,000 of damage. So they're looking at you, and those are the things you can control: keeping your home in good condition, making sure you're showing that pride of ownership in your rental property. That's probably one of the biggest things that will cost you a lot of money overall, is where the insurance company goes in and they take a look at that property and they just see it's in disrepair. It is not being kept in good condition. They're going to start saying no. And so then you're going to have to go to another set of markets that will write properties that aren't in such good condition, but they're going to charge you a lot more for it. And then the things that you can't directly control, it has to do with the macro of what's going on. And that really is why you're seeing the increase, because you're probably saying, I haven't had any claims. Why am I getting these huge increases?
That's
it's
exactly
not
what I'm
asking. Well, what happens is an insurance company, it's a business just like any other. They're running fairly thin profit margins. And so they're saying, okay, for every dollar of premium that we collect, how many dollars are we in turn paying out for claims? And they have to run, at a certain percentage to even make money after their operating cost and all of that. And we're talking like a few points. We're not talking like 50% profit margins. And so when companies start to have to pay out more than they're collecting in premiums, they're underwater. And so then they have to raise rates across the board for everybody in order to stay afloat, in order to stay profitable. And so what are the things that are causing that? In certain states, it is the catastrophe exposure. You take something like what just happened, so sad, what happened in California in the Palisades. Billions and billions of dollars of damage that wasn't contemplated. Like they didn't expect something like that to happen. We model certain events. Like we know that every once in a while there's going to be a hurricane, and every few years is going to be a bad one. But it just seems like year after year, big ones are happening, and it's worse and worse every year. And so the balloon of what they're having to pay out, you can't catch up with the premium. Right. And so thankfully you are limited to your state, because insurance companies define those rates by state. So you don't necessarily have to pay for what happened in California, but every resident of California is going to indirectly pay for what happened in the Palisades. And so in Georgia, you know, we have had some events, we've had some unexpected stuff that has come up. And so a lot of it comes from that. You can't control that. There's nothing you can do about it. Yeah. What we can control is things like what we call in the industry social inflation. And that's where insurance claims get blown out of proportion. Yeah. And what'll happen then is, you know, you go into this and some people think of an insurance policy as a home warranty. And that's not what it was intended to be. An insurance policy is protecting you against the large catastrophic type events that could sink your business. Yeah. It's not for home maintenance. Yeah. And I've seen Reddit threads where folks are like, oh, my house needs a new roof. I probably need to fix it before I sell it, but I'm just going to wait for the next hailstorm and see if it causes a little damage, and then I'll go get a new roof. Okay, you do that. But if everybody's doing that, then it raises the cost for everybody. So then everyone indirectly pays for it. And I think that's the hard part, because folks are like, I want my piece, but
I have been the beneficiary of that, unfortunately. My neighbors all of a sudden getting new roofs, and I don't. And all of a sudden, my insurance rate is now increased.
Yeah. So, I mean, when I get those flyers in the mail from the roofing contractors, I'm like, no, absolutely not. Get out of my neighborhood. It increases everybody's rates indirectly. And that's where you see this kind of rising expense as the costs of insurance go up.
If you're investing in real estate, protecting your properties with the right insurance is a non-negotiable. That's why I want to put y'all on to a company that I personally trust. It's called Steadily Landlord Insurance. What I love about Steadily is that it was created by landlords for landlords. They understand the ins and the outs of everything it takes to protect your rental properties. Whether you're doing short-term, long-term, or even fix and flip. Their agents work exclusively with people just like you and me. They'll help you get the right coverage for your specific property and also help you lock in the best rate, all in just a few minutes. It's really that simple. I've had students use Steadily and they love it. And like I said, I personally use Steadily myself for insurance too. It just makes the process so smooth. If you want a solid protection, I want you to visit striveatl.steadilypartner.com or go to the link in my show notes and check it out. No, that's really good. Myself as a coach, you know, I help clients as they work through the different issues that come up in real estate. It's a matter of when, not, you know, if. Yeah. And, you know, and so I have clients who maybe have a hot water heater or a furnace, and I'm constantly helping them, you know, decipher through if this is, especially now with rates going up, if this is a situation where you need to file a claim because you really, really need to file a claim and this is a large enough claim to file, or if this is like just 10% more than your deductible, then let's figure out something else.
Don't do it. If it were me, and I'm buying a policy for myself, I opt for a higher deductible, let's say like $5,000, because if it's under that, that's maintenance. Yes. That's just part of running the property. And that way it'll keep your premiums down, because the higher your deductible is, the lower your premiums. Yes. And it also means you're not tempted to kind of try to use that insurance policy, like you said, as a maintenance thing, because every time you have one of those claims, you're not just telling your current company, you're telling every future company that you go to get insurance from, because they all report the claims into a central national database.
Yep.
And so when they run, your name or your property, they're coming back and they're saying, boom, boom, boom. They've had these 5 claims, and they may all be small, but that becomes a frequency thing. Oh, they were like, oh, this person frequently have claims, and it's going to cost you in the long run.
Yeah. Oh, that's really good. That helps somebody out there right now that's watching this. I love it. And later on in the episode, we're going to talk about how, like, what are the controllables outside of, like what you mentioned, credit. Outside of that, what are the controllables that we can do to get our insurance down? We'll talk about that a little bit later. But in the meantime, question I have for you is, especially, I love your background. You worked at Geico. You worked at a lot of the big insurance brands in the past. So you have been able to use that experience, what worked well, what didn't, to form Steadily. What makes Steadily different from other traditional insurance companies?
What makes Steadily special is this is all that we do. Most insurance companies do landlord alongside a lot of other things. And in most cases, it's home and auto that are their primary focus, because those are larger markets.
Yeah.
But the landlord space is a massive, massive market. And we made the decision that we didn't want to be distracted by those other things. Sometimes it can be tempting to be like, oh, we could do some of this. We're getting a little ask for some of that. But what we purposed was that we were going to be the absolute best solution for landlords and real estate investors in the world, because this is all that we do. We put all of our time and energy into focusing on it. And how does that translate? It translates into more sophisticated rating. So most insurance companies are looking at a whole zip code or a whole county and just saying, this is the rate for the zip code. We don't. We get far more granular to where we can say, okay, in this particular area, that it's higher, because it's close to the coast or it's by this body of water, but the rest of the zip code is perfectly fine. We don't need to upcharge them. And so we can rate in a more sophisticated way. We obsess about our user interface and our user experience. So when you come on Steadily.com,
I really enjoyed that being a client, by the way.
Thank you. We think so much about just the placement of the button. Where's the intuitive next place that you're looking to click? We watch, as customers, we record the flows and we watch them like mouse click, and we're like, oh, this customer seems confused at this point. I think we're wording this wrong. We should reword it to make it more clear. So that's a lot of what we do. And just that speed and ease, we think about once you're insured with us, what kinds of things do you want to see about your property? What are the things you're wanting to do so that you can self-serve and you don't have to call in? Nobody wants to have to call in. And so building out those tools specifically for landlords in mind. And I think that's the biggest differentiator.
And I love that, because you guys are landlords. So you get it. You get how busy we are. You get how we move, how we think. And so I, as a client, as a customer, I would definitely say that, because I've worked with, and I still have other, different policies across my portfolio. And what I will say is that I enjoy how user-friendly, how streamlined you guys are, how innovative you are. I appreciate that so much.
Thank you.
And just reasonable. And I think it's because you get it, because you guys are landlords. You get that we're out in the field, working with
hustling.
Doing all the things. I love that so much. I love to hear some just real world examples of how Steadily has been able to help protect landlords against, like, just how Steadily Insurance has really been able to partner with landlords.
I think that a lot of what Steadily does differently too is education. And that's something you don't get from other companies. We do a lot of these podcasts and conversations, and we publish materials, we publish content on our social media and on our website, because we're trying to help landlords figure out how to do it better, how to do it right, how to avoid the big mistake. And again, that comes back to we being specialists in landlord insurance and this being all that we do. We can help out landlords in communicating things to their tenants. So we also have a renters portal that we don't talk about it a lot. It's kind of a side thing that we do, but it's really important for a landlord to make sure the tenant gets insurance. And you might think as a landlord, well, what do I care if they don't insure their contents? That's their problem, not mine. No, it actually helps you for you to require them to have tenant insurance, because if something happens, if they invite a guest over, and we've seen this before, your tenant invites a guest over, and while they're in the backyard, the neighbor's dog comes running over and bites somebody, and now you've got this huge claim. If they have tenant insurance, then the first place that they go is to the tenant's policy to collect for that. And it doesn't have to touch yours. But if you didn't require them to have renter's insurance, you're the next deepest pocket. And so they're going to come after you and your policy. And then that hurts you because you've now paid out a claim under your policy that's going to, again, stay on your record for the rest of time. So things like that and that kind of education is something we're doing across the board with landlords so that they have information is power, and just so that they can make better and more informed decisions.
No, that's a great way. That's a great way to partner. Because, I mean, I'll be honest, I feel like insurance is a us versus them. You know, it's like, man, you know, we pay into it and then we need it and then they increase our prices, right? And so being able to educate on ways that we can actually, you know, prevent loss on our end is huge. That's huge. Yeah. That's huge, huge. That's a big part of what we do here is education, knowledge. It will transform so many things. I love that.
If you wanted a quick way to identify what are the things that are potentially going to cause you a claim, pay attention to the questions that the insurance company is asking, because every time they ask you about a certain thing, it is because those are indicators of a higher probability of claim. So when they ask you, do you allow dangerous dogs, exotic pets? Do you allow tenants to have that? Why are they asking? Because there's a higher correlation of people having claims for that type of thing. So learn from those things that you're being asked and work that into your strategy for who you allow as tenants and what your rules and procedures are for your home, because it will then directly translate back to your insurability.
That's really good. Ooh, that's really good. You just helped save someone some money. Oh my gosh, you are great. We're going to have you at the conference too. This is amazing. Girl, that's good. That's good. Okay, now that I have you. Isn't that conversation so good? Aren't you ready to take it to the next level? If you're here and you've been binging all my YouTube episodes and you are ready to buy your first or next investment property, but you just don't know where to start, you just need help to figure out what exactly do I need to do based on my specific situation to figure out how to get to the next level. If that is you, I invite you, along with all of my mentees, to join us in my Pathway to Purchase Your First or Next Investment Property program. This program is so amazing. This is how you are actually able to work with me directly. Here's the beautiful part about this program. You pay one time and that's it. It comes with lifetime access. Everybody repeat, lifetime access. There is no renewal fees, no annual fees. You get access directly from coaching from me. Every 2 weeks, you're going to be able to chat with me, figure out what your specific situation is. I'm going to be able to help you overcome it. Plus, you have access to over 50 on-demand trainings that's going to walk you through everything. If you're just now learning about what all this real estate stuff means to I want to actually scale and buy my next multifamily property, it's going to teach you everything in between. And here's the best part. With the 50 plus on-demand courses, you aren't just learning from me. You're learning from the best in the industry as well. You're learning from Dr. Joe about property management. You're learning from Dominique about out-of-state investing. You're learning from my top contractors on how to work with contractors. This program is so amazing. I even include checklists and SOPs and downloads. So if you buy a property and you have a tenant and you don't know what to do, guess what? There's a checklist for that. You're getting ready to do a renovation and you need a contractor agreement, guess what? There's a contractor agreement with that. I'm able to basically just provide everything for you. Why start from scratch when you have access to a program that is done for you? You have the support you need and you have the community. I want you to join me in the Pathway to Purchase Your First or Next Investment Property program. And guess what? Because you listen to this podcast, I'm going to give you a little discount. If you go to the link in the bio or onlyinlivingit.com and you enroll today and hit P2P 500, I'm going to give you $500 off. Yes! I look forward to seeing you on the next call. Come join me. Okay, so just a few more things, and then we're going to get into some ways you can help us save. You keep dropping gems. You're kind of dropping some crumbs. I hope y'all picking it up if y'all watching this. Think about some of the biggest mistakes that you see landlords make, and you just want to be like, don't do that. What are some things that come to mind outside of what you've already mentioned?
Well, one of the things that leaves me scratching my head is landlords who self-insure. That is a bad idea. And I understand part of the thought process where you might say, I own this property outright. If it burns down, it's not worth all that much. I'll just build it again, or I'll just move on and buy another property. That's fine on the property side. But what I don't think they're thinking about is the liability side. And if you have amassed wealth from your properties and personally you have this wealth, if something very bad happens on your property and they feel that there's a case against you as the landlord because you own that property, they don't even have to be right. They don't even have to win. You still have to defend it, and you will spend hundreds of thousands of dollars defending a major claim. And if you haven't purchased an insurance policy, you have no defense. You're paying for that yourself, all that liability. So I would say for the folks who are thinking about self-insuring because the value of their properties are low or they don't have a lien on it or a loan on it, my suggestion would be, okay, just ask for a liability only policy. That's fine. We'll take the property off of it, but get the liability. Don't go without it.
The risk is actually, worse than the reward, like in so many ways. I actually, believe it or not, I have a client that I am supporting right now who she has a rental property. Her rental property has coverage. There's a house behind her, and the tree there was like a storm in her backyard. There's a house behind her that was self-insured. And during a bad storm, a tree in her yard fell on their house. The person who was self-insured is trying to sue her insurance company because they didn't have insurance. But it was really an act of God, and it's trying to prove negligence. And it's really, I'm like, just get a $500 policy. What are we doing?
Yeah, those liability policies are pretty cheap. I would say the other mistake some folks make is they buy the stripped down basic policy that only covers what we call named perils, which means that policy only covers the things that are specifically listed on that policy as being covered. And that's usually things like fire, wind, theft, that sort of thing. But the comprehensive policy covers everything that's not specifically excluded. So it may still have some exclusions in it, but it picks up all those things that you don't even think about. And real life story, my co-founder and his property in Chicago that he's had all this trouble with, again, out of state landlord. He had a property manager, but he ended up letting the property manager go because he wasn't happy with how it was going. So then his property sat vacant for a while. Well, some people broke in and took up residence inside of his property. And by the time he found out about it, they had defecated in the bathtub. They had, gouged holes in the floor, just wreaked so much damage on this property that had caused him so much pain. So at this moment, he is paying, I think something obscene, like $500 a day for round the clock security to guard this property until he can get it sold and get it over the finish line. And so thinking about that too, like when your property is vacant in between tenants or while you're doing renovations or stuff like that, take those measures to protect the property. Go take a Ring camera over there so that you can see people coming and going. Just do what you need to do to protect that property because it can rack up so quickly, especially when it's being unattended like that.
Yeah, I've definitely had those lessons myself. I won't bore you with the details today. Definitely have learned that Simply Safe is my best friend. To have that easily ordered off of Amazon and put it on the property. Yes.
Yes, 100%.
Just to recap those biggest mistakes: having the correct policy. I always say a cheap person pays twice. Don't be cheap. Don't be cheap. Get the right coverage that you need and protect your asset. And that's why, I actually try not to say passive income because I don't think that real estate is passive. Even if you just even if you invest in like a REIT, there's still some active involvement that you need to have with that property. So
yeah,
that's what it
for
is.
sure.
Okay, now, you've been great. This has been awesome. Now we're going to share. Can you share, please, some ways that landlords can use to lower their premium? Also, I learned last year that you do get a discount when you have a property management company. I was talking to my insurance broker, and she's asking me, she's like, well, do you have this? And also, side note, having a good insurance broker or team, or just, to me, this qualifies for any person on your team. When they ask questions, that's a sign that you're working with a good, competent partner. Because if people just kind of put you in things and they don't ask you questions, you could potentially be missing out on opportunities. So they asked me about the property management company, and I was like, wait, what? Oh, I get a discount? Oh yeah, absolutely. I actually do have a property. I just stopped self-managing. And so I was able to get a discount. So you mentioned earlier that there are some ways that we as landlords can help save some money, and that's important for us. We need to save some money so we can increase our cash flow. What are some other ways that we can lower our insurance claim that we can control?
Oftentimes, you can get a discount for having a property manager. Okay. It's not with every company, but a lot of them do, because that means you have a professional in the mix. You can carry higher deductibles, which will mean that you're taking on some of the smaller things yourself, and your premiums are going to go directly down as you raise those deductibles. Many insurance companies will offer a discount for having an alarm system installed at the house, especially if it's vacant and you're in between people, if it's a short-term rental, so you have visibility into that. Something else you can do on a practical basis is go through with your agent and talk about the actual coverages that are on the policy and if you actually need them. So what is very typical in the industry that we try not to do here at Steadily is they just automatically give you contents and other structures at a percentage of the main building. Mm-hmm. So let's say if you have a $500,000 property, it's automatically going to give you contents at 20% of that. But if you're a long-term landlord, you don't have any contents in the property. You maybe have a washer and dryer, a refrigerator, maybe $5,000 worth of coverage. Right. So you're paying for all of these coverages that you don't actually need. Other structures, that's for other buildings that are not the main building on your property. So let's say you have an outbuilding, you have a shed, a barn, you have a nice fence. Well, if you don't have any of those things on your property, then you're essentially paying for coverage you don't need. And so maybe talk to your agent and say, hey, can we bring that down to zero? Can we reduce the contents to $10,000? Because I don't really have contents in my property. Oftentimes that limit was derived from homeowners for contents, which that's your home. That's all your precious things. Right. And so it's worth a lot more. But even if you're a short-term landlord and you've furnished this property, you don't have the same emotional connection to those things. They're just things, and you can probably quantify what it would cost you to go replace those things. There's just not as much in those properties. And so many times you can reduce that limit pretty significantly, which directly relates to the premium because there's less exposure on the policy.
That's good. That's really good. That's good. How often should someone be reviewing their insurance policies and, asking for a new quote?
Anytime you've made any kind of major changes or you're changing your usage, you need to contact your agent. And I know it's not something that's at the top of someone's mind when they just did a kitchen renovation of, I have to go call my insurance company. But if you just rebuilt that kitchen, if you just renovated a property, the value of that property has increased. Mm-hmm. And so you might be like, I don't want to go tell them, it's just going to increase my rates. Well, yes, if the value of the property has gone up, it is going to increase your premiums. But if you don't, and a claim happens, you're going to be looking at your pretty kitchen saying, yeah, but I want a new kitchen. It cost me $25,000 to repair this kitchen. Yeah. But your policy says, no, this policy was written based on the old kitchen, which was only worth $5,000. And so when that gets paid out, you don't have enough money to fix it. Yeah. So some things to consider and look out for. If vacancy changes, so if you're moving it from a long-term to a short-term, you need to talk to your agent to make sure your policy is okay with a short-term limit. Mm-hmm. Because if you told them at the beginning you were using it for long-term and you never told them that you switched it over to short term, that's a different exposure. And yes, the premium's a little higher for a short term because there's more people in and out of that property every day. But if then you have a claim and they go investigate and they find out you were using it as a short term, but you told them it was a long term, you might find yourself without a claim being paid. Outside of something changing like that in terms of renovations, usage, that sort of thing, I would say it's probably a good rule of thumb to just revisit it every 3 years or so. Say, okay, like, let's take a look. You're busy. You probably don't want to reshop it every year. Sometimes moving it for a few bucks is more pain than it's worth. You have to change everything and get it, like, just let it roll. But I'd suggest looking at it every 3 years or so to make sure you've still got the right thing.
That's good. That's good. One final question, because I can hear my clients in my ear asking me this. Where does midterm rental fit in? 30 days or longer. Do you guys still consider that short term?
Most insurance companies would classify that as a short term. Usually what they're looking for is if the lease is 6 months or less, that's not considered long term. And so it falls in that midterm space, which just means you are paying a little bit of a higher premium, again, because you've got folks in and out of the property, and the policy is structured just a little bit differently, because often in a midterm, maybe you have like nurses who are staying for several month assignments. You're furnishing a certain amount, which is different from a landlord policy where you have very little that's in there that belongs to you.
I love it. I love it. This has been so great. Any other last tips or just things for landlords to consider with insurance?
We talked about making sure your tenants have their own insurance in place and why that's good for you, not for them. Making sure that you have the right policy in place. Don't go buy the homeowner's policy and celebrate because it was cheaper and you got them to sell it to you, because again, you're paying for nothing. It's going to hurt in the long run. We talked about looking at the actual coverages you have to make sure they're relevant. The other thing I would say to look out for on short-term rentals is if you're offering excursions or activities that take them off of your property. So let's say you offer bicycles that they can go out and ride with. You offer canoes that they can take down to the local creek or something like that. There may be additional insurance that you need to protect yourself for those occasions, because the liability that comes with your policy kind of built in is called premises liability, which means it only covers things that happen on the premises. So if somebody takes something that belongs to you off the premises and something happens, you need more insurance, because your policy will say it didn't happen on the premises. Like, the policy doesn't offer any protection for this. And I think the thing I constantly remind myself of, you can say all day long, well, that claim wouldn't hold up. Like, that suit wouldn't hold up. They can't sue me for that. I didn't do anything wrong. They can sue you for anything they want to. Whether they're right or wrong does not matter. You still have to defend it. And that's the biggest piece, is you will use the whole limit just on defense. If you never had to pay out a penny to the person who brought the suit, they're called frivolous suits. And so I think that's one of the key things just to remember in the back of your mind. It's not that it's right or that it's fair, it's that they can, and that's what you have to protect against. And it sucks, but it's reality. It
is reality. And what I will say, if you're listening to this and you're like, okay, this is a lot. I would say that with additional wealth comes responsibility. And that's why, and one, yes, this is work. I'm choosing this hard, but I prefer to choose this hard that provides future and current financial options. And when I partner with the right companies and the right people, it does make things much easier.
It is very much true. And that's what we've tried to build here at Steadily, is we're the right people. We can help you out. We can answer your questions. We know what we're doing in this space. And I guarantee you, any scenario that you can bring us, we've seen it before, and we know how to walk you through it.
I've had it's interesting. I had a client that had a fire last year, and so it's like, and she was freaking out. I was like, you know what? This is not the first time I've seen this. It'll be okay. And so surrounding yourself with people like that would be great. That's awesome. So where can people find you? Where can people find Steadily? And I know I'm going to drop a link in the show notes for them to connect directly with you. If they have more specific questions for Steadily, where can they reach out and connect?
Yeah, please come find us on steadily.com. Or you can give us a call, 888-966-1611. And we've got teams here all day long ready to answer your questions.
Love it. Love it. Love it. Thank you guys so much for listening to another episode of Wealth Within Reach. Don't forget to subscribe. Send this to 3 friends who is either already a landlord or interested in becoming a landlord, and make sure they watch this episode. All right, guys, I'll see you next week. Thank you. Bye. Are you listening to this and you're confused because you don't know what your next step is? You don't know what your next step is because you don't know what you need. Guess what? I got a resource for you. I created the Investor Roadmap Quiz to tell you exactly what you need to do based on exactly where you are. It's just a list of a few questions that's going to actually map out and tell you what you need to be focused on and what you need to be doing that will help you get to the next level. It only takes like 2 minutes. It's phenomenal. If you're looking to figure out your best next step, I want you to go to owningitandlivingit.com or go to the show notes and look for the Investor Roadmap Quiz, because I want you to figure out what your best next step is. See you soon.